If your portfolio still feels safe in May 2026, that is exactly the moment institutional desks start quietly hedging. Welcome back to Shahrukh FX Crypto. Today we are not predicting a date, we are reading the late cycle map that big money is already following. Let us start with the Shiller PE, also called CAPE. It smooths earnings over 10 years, and right now it is sitting in a range that historically only appears before serious multi-year corrections. The 1929 top, the 2000.com top, and the 2021 everything rally top all printed extreme CAPE readings. We are not far from that neighborhood today, and that is a structural warning, not a daily noise signal. Second, look at concentration risk inside the S&P 500. A handful of mega-cap AI names are carrying most of the index. When 5 or 6 stocks drive the tape, the index looks healthy on the surface while breadth quietly weakens underneath. Equal weight versus market cap weight performance is the chart you want on your screen. When that gap stretches too far, history says the unwind tends to be fast. Third, watch sector rotation. Institutions do not ring a bell at the top, they rotate. Money has been creeping into utilities, consumer staples, healthcare, and selective energy names. These are classic defensive plays late in the cycle. If you see this rotation accelerate while tech leadership narrows, that is a behavioral tell, not a coincidence. Fourth, the cross-asset picture. Gold pushing into fresh ranges on XAUUSD, Bitcoin holding structure on BTC while equities chop, and the dollar acting unpredictably on DXY all suggest investors are looking for non-correlated havens. That is exactly what late-cycle positioning looks like. So what do you actually do without gambling? You do not pick a crash date. You raise your awareness of risk. You size positions smaller. You keep cash and stablecoin reserves higher than usual. You use defined risk structures instead of naked exposure. You journal every trade so emotion does not run your account when volatility expands. And remember, a crash is not the only outcome. A long, grinding sideways market that punishes leverage is just as common after extreme valuations. Survival is the strategy. Capital preservation now is what funds your aggressive buying later when fear is finally on the tape. If this breakdown gave you a clearer late-cycle checklist, do one specific thing for me. Comment the word radar below so I know to make the next video on the exact defensive rotation chart pattern.